Hi, welcome to this special budget discussion at Forbes India. Budget 2026 is out of the way, and Finance Minister Nirmala Sitharaman has done her job. There was a bit of a surprise on the taxation front for equity markets, and there were plenty of announcements on the customs side. To go behind the fine print and understand what these announcements hold for us in the short term as well as the medium to long term, we're joined by two experts. Ambareesh Baliga, a noted market expert who's a regular on television, as well as Saurabh Agarwal, who's a partner at the taxation practice at EY India. Welcome to the show, Ambareesh and Saurabh. I'm also joined by Salil Panchal, Deputy Editor at Forbes India, who will be co-anchoring the discussion with me. So Ambareesh, let's start with you. There was a bit of a surprise on the STT front where STT has gone up for those playing the futures and options market. Now, I think what got people by surprise was the fact that there was absolutely no inkling that this would come. And understandably, the markets sold off almost immediately. There was a bit of a recovery. And then by the end of the day, we were almost at the low point that we'd reached in midday. So how would you decode this surprise that really came out of nowhere? And how negative is it?
No, see, from the market's perspective, we were looking at some sort of swaps. One, first of all, reduction in STT as far as the cash market is concerned, because when STT was introduced in 2004 or so, that time the long-term capital gains tax was made zero, and because of which STT was introduced. And after that, we have seen long-term capital gains tax going up, year after year. And STT also had remained the same and increased a bit. So there was an expectation that STT would be reduced. Instead of that, the finance minister has imposed a higher STT on F&O. Now, that's fine. I mean, they want to discourage traders. I think that narrative has been there earlier from the government as well as SEBI. But, I mean, they could have increased it for F&O and reduced it for the cash. I think that could have really, been encouraging for the investors, discouraging for retail speculation, and it would have been a good narrative. So I think the finance minister lost that chance, which she could have made good use of. And I think the other one was on the FII side, because 2024, when FII taxation was introduced, I think that was taken very negatively, and because of which we have seen huge amount of FII selling since the last 2 years. So the market expectation was there that there could be a major tweak in that taxation, so that FIIs would again come back and start investing in India. So I think these two were the major misses from the market perspective as far as this budget is concerned, and because of which we saw a sudden knee-jerk reaction at that point of time, and after that it was one way down.
A quick follow-up on this. You said that in 2024, when LTC, I think you were saying that long-term capital gains was hiked and there was some sort of expectation that there would be a relief on that front, if I heard you correctly. But do you think that this will ever happen? Because we are moving to a regime where, they just seem to try and hike both long-term and short-term. And it may be gradual. Something or the other keeps happening every year. So I think the point that people were making was that not the fact that it's being hiked, but the fact that there's just so much uncertainty. You don't know what's going to happen in any given year. And would you say that is also a big issue?
No, what we have seen is that the government prefers to keep milking the golden goose. And finally kill the golden goose, because just because investors are making a decent amount of profits, huge amount of profits. If you're talking the last 3-4 years, you can't keep on increasing the taxes, because at some point of time it's going to come and hit back. I'll not be surprised if for FY26 overall, if you see the tax from capital gains would be much lower than what we have seen in the last 2 or 3 years. So it's better to have the markets in decent shape and stick to your stick to lower taxes than keep hiking taxes, because it would be counterproductive.
Right, and sort of, I'll let Salil ask the questions to you, but just to start the discussion with you, there was a lot on the customs front, maybe if you could just demystify some of the proposals for our viewers, and then Salil will have more specific questions as we go along.
So, Samar, before I ask your question on the custom duty and hearing Amrish talking about the STT, I think one thing, it's more on the fine print and which will need to be looked into finer in detail. The IFSC tax exemption moving from 10 years to 20 years. How can the foreign investors as well as Indian investors look into to relocate into IFSC? That will give a complete exemption for 20 years. So, in my view, while there has been a STT which has been taken in a negative manner by the market, but if we look at IFSC exemption which has been extended for 10, 20 years, I think it's something which market has to watch out for. To come to your second part of the question, which is around the custom duty. See, I would put it like this that, and rather I'll answer it more in the manner of manufacturing or the context of manufacturing. The way which I look at it is that we are moving from assembly based manufacturing to high precision manufacturing, of which there are actually four elements which are very, very important. One is the recalibration of the custom duty rate, which we are seeing. Parts of microwave exempted. When we talk about parts, sub-parts of aircraft parts, which have been further exempted. If we look at some of the other things which they're doing on the nuclear power side, they've exempted some of the raw material for nuclear power. And then there is a rate increase happening in certain cases. What does it showcases? It showcases that recalibration is being done to meet the objective of more localization in the country. The second thing which the finance minister in her opening speech itself talked about was around the focus around 6 to 7 sectors where the incentives have been given. ISM 2.0 around the semiconductor, the ECMS enhanced budget for textile industry, sports equipment, heavy construction machinery, so on and so forth. All these things also entail that the focus is on manufacturing. Thirdly, when we look at the focus this time is not just on giving incentives. She talked about cluster development for rare earth, which is Odisha, Tamil Nadu, Andhra, etc., Kerala. I think this is again once again very, very important from a cluster development perspective because the focus is there. And then if you talk about chemicals, she again talked about cluster development on the chemical side. And lastly, I think this is the most important part, rejuvenation of 200 legacy industrial clusters where they will now focus upon, which will be like a big thing for the large as well as MSME industry. Because see, the employment is coming all in all from MSMEs. The huge employment is generated by MSMEs. And if we are able to rejuvenate these particular industry clusters, trust me, the focus of the budget, if I have to summarize, the focus is on high-end manufacturing, the focus is on creating employment, and the focus is looking at long-term supply chain, making India a global manufacturer for the world.
So I'll come in here, Saurabh, just to take off on what Samar was saying. Because it is still a highly uncertain, geopolitical issue, the environment, the ecosystem. Is this the best she could have done, or is there unfinished business yet, an unfinished agenda which you think needs to be still looked at in maybe the next year?
So, Salil, many a times when I look at and my expectations of the budget, one clear thing which has been missed out is a 15% rate of income tax as far as the new manufacturing units are concerned. This has been a consistent demand of the industry, which somehow I have not been able to see that. Last year also, we were all expecting that this will happen. Second thing, or more around, and I have been advocating it multiple times, maybe this is not the right time, that's why they are not coming up with this thing, is around a 5-year game plan for custom duty on some of the sectors which they feel are of national importance and where they want to focus on manufacturing. If you remember long back, there was the Kelkar committee report wherein the 5-year structure was given. If they give a clear 5-year structure for finished goods, intermediate and raw material, what it will ensure is that it will clearly inform all the stakeholders, whether it is the bankers who provide debt funds, whether those are investment bankers who provide private equity, whether there is a retail investor, whether it is an Indian manufacturer or a foreign manufacturer, all the stakeholders will know when to set up manufacturing in India, what to set up manufacturing for, and whether the projects will get the right financing or not. So these are the two things where I feel is a miss in the budget. And again, of course, if you look at overall geopolitical tensions all across, maybe it will take some more time for them to come out with these reforms.
Ambareesh, a very here now question for you. So we've seen that Friday saw a global sell-off in gold, silver, and commodities, and we now have this budget that came on Sunday, and we were the only market that was open on Sunday. So you've seen one level of a reaction today, and this is not the finance minister's fault, but you could have tomorrow's reaction to the Indian budget layered with the global reaction tomorrow, and so it's hard to forecast markets, but if I can ask you, what happens tomorrow in the Indian equity markets?
The next few days, instead of tomorrow.
Okay, next few days. Oh, fair enough.
See, this budget isn't anti-market. It was sentimentally negative, but it was not anti-market. Now, if you look at the budgets of the last 10 years, I mean, how many years did we see the budget having a longer-term impact on the market? When I say longer term, I'm talking of more than 10 days impact on the market. Just two budgets, 2016 and 2021. So the way I see it is possibly over the next 2 or 3 days, we will see possibly some more reaction, and then the budget is forgotten. It's life as usual going ahead. So, I mean, it's possible that we could see some more downside on tomorrow, because today FIs are more or less absent. So we could see some more selling coming in from there. And if I'm not wrong, the reason why we saw a major sell-off towards the end of the session today was an expectation that FIs will come tomorrow and sell. So before that, let us sell and book our positions. So maybe Monday, maximum Tuesday. I don't see this reaction continuing beyond that. Because like I said, it was sentimentally negative because people were expecting something, and that's not been announced. So it became sentimentally negative. She's not announced anything which is directly negative for the markets.
Right. But on the FII point, they've been net sellers for 12 plus, almost 18 months now. And the budget sort of doesn't do anything to bring them back.
Exactly.
Would you agree with that, or would you disagree with that?
No, I mean, that's what I was saying. That we were expecting a major tweak in taxes as far as the FIs were concerned. A reversal of what they had done in the FY24 budget. So if that had happened, we could have seen that possibly going ahead, subject to other issues. That is, the other major issue is the rupee. As long as the rupee keeps depreciating, you will not have FIs coming back early, because they also want to see a stable rupee before they come in. Because valuation wise, I think we have seen a decent correction, because of which valuations have become decent. I won't say it's it's very cheap, but they have become decent to start buying. But FIs will not come back as long as they see the rupee continuing to be weak.
Right. I just move over to Saurabh with a quick question before I hand it over to Salil. Saurabh, we've had a situation where, a lot of on the taxation front, a lot of the limits, etc., haven't been revised for a long time. So two that I can think of on the personal taxation front, things like the home loan deduction, that's one, standard deductions. Also, when travelers come in from overseas, the limit on the customs baggage allowances, etc., haven't been revised. And I know in some countries there's sort of inflation index and revised every year. In some they're revised periodically. But this has been a constant bugbear that these limits should be revised at least periodically. And I'm wondering if you had any thoughts on that from a taxation perspective, because a lot of these limits are too low now. Yeah.
So Samar, if you ask me from a personal income tax perspective, I don't think we were expecting much. I think the focus of the government is to move out from deductions and move towards into the new income tax regime, where they give that 12 lakh rupees, up till 12 lakh rupees, there's hardly any income tax on any individual. Now, if you look at from that perspective, I think there was no expectation and nothing much has come. Now, coming to your second question on the cabin baggage issue, as to the allowances on the cabin baggage front is concerned, I think for your users or your viewers, it is very important, before even the budget was rolled out, as the firm, we have specifically written an article more on in the Times of India. We specifically talked about that the baggage limit is very less, which is around 50,000 rupee before the budget. And we said that if this this limit was fixed somewhere in 2016, and if we apply the indexation to it, it would come at around somewhere around 75,000. And at least in this budget, we are seeing that the limit has been increased from 50,000 to 75,000. So, which is again a big thing, which there is a change which has happened. The second thing, there was a capping on the value of precious metals which you can bring in. So, like for a women, there was a 40 gram, but there was a value limit to it, and for a men, it is a 20 gram with a limit around it if you have stayed outside India for a specified number of months. Now, in this limit, also with the precious metal shining like anything and the value increasing, the capping with the value terms was something which was not required, and that has been removed. So now there's no capping in terms of the value. The capping is more in terms of the grammage, which was there earlier itself. So therefore, it's again a big relief as far as the cabin baggage limits are concerned.
So we chemicals front, but any other sectors which you think definitely need immediate attention, maybe in coming months or weeks as things move ahead? Saurabh?
So I think,
Sectors
Salil,
which need-
if you ask about specific sectors where I foresee there is some more requirement, I think I'll put it around the battery ecosystem. I think with the alternate energy becoming a key requirement, whether it is electric vehicle or a battery energy storage, I was expecting an incentive around battery ecosystem, which was cathode, electrolyte, anode, LiPF6, etc. Similarly, even on the custom duty side, I was expecting that the concessions which have been given on the lithium ion cell and its components, those concessions somewhere will fade away, or a phased increase program or a glide path approach will be given over there. The next sector where I was foreseeing that there will be some action will be around the toys sector. I think they have been talking about toys. I think there's some more requirement as far as toy as a sector is concerned, because there's a lot of you can say finished goods which are coming from the neighboring countries, and how we can actually develop the industry into the country. These were the two things which was the expectation which I foresee as a miss. The next thing which I wanted to specifically highlight about is the production linked incentive schemes. A great success, 2.9 lakh crores approximately, which has been allocated around 20 sectors so far before this budget. If we look at all these things put together, what is happening is that the overall disbursement has happened somewhere close to maybe 25,000 odd crores, and we'll see the expenditure budget as to exactly the numbers, what the exact numbers are. The last time the overall numbers which were estimated was around 25,000 crores. I think somewhere, I think there is a requirement, whilst all the PLI schemes have been really successful, somewhere there's a requirement how, looking into the global tensions and the dynamic nature of the economy now, how we can tweak some of those particular schemes to make them more realistic in the current scenario, and ensure that the benefits are reaped out by the manufacturers in a fast track manner, and we are able to somewhere get a shelter against the global tension. But of course, if I look at the today's GST collection number, I think I was very happy by looking at the number. At least there's a 6% growth which is coming, which showcases that while the global tensions are there, but our economy is resilient.
Ambareesh, on a day like today, one really had to struggle to find stocks that were in the green. But in every sort of down market, there lies an opportunity. So I'm wondering if there are any sectors or companies you can talk about that would specifically benefit from the announcement today. Data centers is one, but we don't have too many listed plays. So any other such thoughts you have on companies that one could look at for the medium term?
Today's budget is clearly healthcare. Data centers, like you rightly said, there are not too many data center companies as such, but there are data center ancillaries, which I think should stand out. And what they've announced for data centers is huge. I mean, if we're talking of no taxes till 2047, that's a big story going ahead. Tourism also has benefited to a certain extent. EMS sector, I mean, that's got an allocation of 40,000 crores, which is extremely good. And the others were the ones which were affected by US tariffs. The textile sector, I mean, there was like I think it was a bit less than what people are expecting, but still there is something for the textile sector. I mean, for the marine sector. So I think these are the ones to be looked at.
So Saurabh, just as you're talking about manufacturing also, and the PLI schemes doing well. Uh, is there any particular segment in the PLIs you'd like to highlight which you think have done well if you look at FY26?
So, many times I have made this statement on multiple channels. If you look at mobile phone scheme and mobile component scheme, I think really done too well. I think, there's a reason for the same. There are three levers actually. One is the PLI, which is a direct fiscal incentive. Second is the custom duty. And third is the quality control orders. All these three levers put together, or a combination of two levers, actually work in favor of the industry. So mobile phone industry, that's why have been able to do well, because both PLI and custom duty as a lever came in to protect the domestic manufacturers. The second industry which has done really well is the solar module industry, or the solar cell. I still remember a long time back it was being said that solar module is a very highly technical industry. Today we say, oh, module is merely assembly and it's cell where the technology is required. I'm sure after 2 years from now we'll say that for cell also there's not much of a technology required. It's for wafer which the technology is required. Again, if you see why the solar industry has grown in India, primarily because there was a duty protection given in the form of 40% custom duty on solar module and 25% on solar cell. And then there was a quality control order which came in, and there was a ALMM which was rolled out by the Indian government. All these things put together has pushed the industry to do indigenization. So my personal take is it's a combination of multiple levers which work in your favor. To answer your question specifically, I think mobile, telecom equipment, solar, some bit in auto as well, and semiconductor. These are the PLIs which are working well for the industry.
Right. Final questions, gentlemen. Ambareesh, to you. The futures and options market provides an important level of liquidity to and price discovery in the Indian markets. So we've had restrictions on F&O earlier that sucked out one level of liquidity. You now have the hike in STT. Is there a concern that this could sort of start hampering things like price discovery, liquidity? You need liquidity to sell and buy. So what would really the long-term impact of a measure like this be? Any thoughts on that?
It may look big, but if you're talking of a slightly longer term, I think it'll get absorbed. It'll not really bother. So because of which we have seen a knee-jerk reaction, but then because of this hike in STT in F&O, I don't see liquidity really shrinking. I mean, we could see it shrinking from a short-term perspective, but then people do come back to the markets sooner than later. So I'm not too worried about the STT increase as such from a longer-term perspective. But yes, in the short term, it will have a sentimental impact.
And Saurabh, to you, when you look at the customs front, there was a lot of talk about rationalization of not just duties but also procedures. On the procedural front, there was a lot that could have been done. Your final thoughts on that? Was this a missed opportunity, or you think the finance minister has done enough on the procedural front, to make things easier for importers, exporters, things like that?
So, some two things which are emerging. On the rate rationalization also, there were around 8 to 9 rates, which we are thinking that the rates will come down to maybe 4 to 5 in numbers, just like what happened in the GST rate rationalization. While she has tried to somewhere, you can say whatever are the notifications which are not required, she is removing those and bringing it directly into the schedule. I think the next step will be to bring down the number of rates in customs as well. Coming to your specific question on the customs procedure, I think one thing which they have done is the AEO tier 2, tier 3, and then the eligible manufacturers, they'll be given around a 30-day deferral under the customs duty scheme. That's a big procedural change, which in my view, she has started. The second thing which she specifically said in her speech is that over a period of 2 years, they are trying to revamp the entire customs IT system. I think that's again a big change which the industry has been asking for quite long. She also talked about AI and technology interference into the play, which will help in overall making the clearances more easier. I think these are something which are, you can say, changes which have a long-term impact and may not be realized at this moment of time. But these are all changes towards the ease of doing business, and we do foresee the foreign investors gaining more and more confidence as far as Indian taxes are concerned.
Right. Thank you, Ambareesh and Saurabh, for joining us. And thank you, viewers, for joining us. We hope we've been able to decode some facets of the budget and also talk to you about the short term, medium term, and long term. Thank you for joining us again.
Thank you.